Buying and selling. You buy something, you sell something. This is called a round-trip transaction. Nearly all types of transactions have this idea: buy something at a price, sell it higher. Think of the real estate industry, for example. You buy a home and sell it later at a higher price. As far as price goes, how many directions can it really go? Seems like everyone says 2. In reality, a price can go in 3 directions: up, down, and flat. This line going up is about buying and then selling at a higher price. If you are an entrepreneur, a business owner, professional, investor, or fall under the category of someone who works for money, you should be very familiar with this one line going up. But when you think about it, it only goes up 1/3 of the time. It goes flat 1/3 of the time, and it goes down 1/3 of the time. So no wonder why most people just don't make any money. I didn't know that until I was 37 years old. I only thought about the one line going up also. I did everything that way, traded my labor for a weekly paycheck, and invested in a piece of real estate to, ideally, sell it at a higher price. I never thought about the other ways prices can go. Well, my own personal real estate lost 30 to 40% value in the past 5 years, which is terrible. My whole life has been based on prices going up. With stocks, it's the same concept. Price goes in 3 directions: up, flat, and down. I want to show you this concept so you understand the different ways of trading stocks. It should just blow your mind, just like it did mine. Now, let's look at some examples of buying stocks and making a profit with the price going up. I'm going to buy a stock. Let's call it Home Depot, since you know the name. I buy it at $20. Whether it's 5 minutes later, 5 days later, or 5 months later, I decide to sell it at $22. What did I make? That's right, $2 per share. If I had 100 shares, what did I make? $200. Let's do it again. I buy Lowe's at $17. Later on, I sell it at $23. I made $6 per share. Last one. I buy Walmart at $15. Later on, I sell it at $14. What did I make? I lost $1 per share. By now, you should understand this type of round-trip transaction. Buy, then sell. We hope to buy low and hope to sell high. That's the idea. The last few years, with mutual funds, retirement accounts, and real estate, people have just gotten slain because they didn't understand the other 2 lines. Look at this again. I placed my very first order with Home Depot. It was a buy. Later on, I placed my sell order. With Lowe's, I did the same. Buy, then sell. And again with Walmart. Bought first, sold second. That's what most people understand. The 30% line up. Now, what about this bad boy, the down line? That's the problem. No one expects it. No one thinks about it. How do you benefit from it? This is what you need to understand about stocks. The guys who created the stock market were very intelligent. They realized prices really go in more than one direction. They go up, down, and flat. What can we do about the down? Understand this. They, the stock market creators, do not care which order is placed first. There will always be a buy order and always be a sell order. The cool thing about stocks is they don't care which order comes first. You can place your sell order first, and then at some point, place your buy order. Let me give you some examples. Let's say there is a company, ABC, and let's pretend, for example purposes, you know it's going to be going down in price. So if you think the price is going down, you wouldn't want to be a buyer of it. The cool thing is you can place your sell order first. You put your order on the books. At $18, you're selling it. Later on, 5 minutes, 5 months, 10 days, whenever, it goes down to $16. You say, okay, that's it. I'm ready to place my buy order now. So, if you read from left to right, you bought it at $16, you sold it at $18. What did you make? $2 per share. Let's do it again. Another stock, XYZ Company. currently is at $25. So we think it's going to go down. We place our very first order on the sell side of the chart. Remember, you always have to do both orders. We're placing the sell order first at $25. 3 weeks later, or 3 minutes later, it goes down to $21. You now place your buy order. What did you make? You read it from left to right. You bought it at $21. You sold it at $25. You made $4 per share. Let's do another one. The price is at $14 with company ZZZ. You place the sell order because you think it's going down. Later on, you place your buy order, and it's at $14.50. What did you make? That's right, you bought it at $14.50. You sold it at $14. You lost 50 cents a share. So that is what's cool about stocks. Once I realized this, wow! Now I have a way to make money when the price is going up, and a way to make money when the price is going down. So I have 66% in my favor. What a huge difference. So let me repeat. They don't care which order is placed first. You can place your sell order first, and then at some point you can place your buy order. Let me show you once more. If you want to play the stock going down, you would do what? That's right, you would place your sell order first. Then at some point you would place your buy order. This would complete the round-trip transaction. You always have to do both orders to complete a transaction. I know many of you are thinking, well, I get it, I understand, but how do you sell something that you don't already own? I'll cover that more in my stock trading course, tradingtemplate.com. I just want you to know this concept. Prices go in 3 directions, and with stocks, you can make money going in 2 of the 3 directions, up and down. It doesn't matter if the price goes up or down. You can make a profit either way. And in my course, I'll show you how to do just that.